What's good, y'all? It's your boy Reek got options, and like I always say, whether the market's up or down, we see green. And today we seen big red across the board, but we did start out okay with Amazon. We'll get right to that. But before we do, let's talk about what we saw on SPY today and some geopolitics. Because first of all, Iran didn't show up to see JD Vance today and have a meeting about peace talks. They hit him with the 52 fake out, and then Trump stated that, yo, we're just going to have the ceasefire go on indefinitely. So it's a lot of things going on right now, and people are still dependent on the news headlines. But like I told you guys yesterday, we need to worry about technicals also because they mean something. And right here, this looks like a bearish signal right here at the top. And with that being said, we came down to fill this gap up right here. All right, at 702. Now, if we break down below here tomorrow, we could possibly drop to 698, so on and so forth. Okay, so have your downside levels. And remember, 698 used to be the high. So this is going to turn into support. If it's not a strong support, then we can get a flush right here. All right. So if you want to understand and learn how to trade in the market, whether the market's up or down, stay to the end of the video because I have a little technique for you guys to trade at the beginning of the market at open or in the first 15 minutes. And then also the last couple minutes of the trading day, because there was a lot of people that made a lot of money the last 30 minutes of the trading day when we started to drop. All right. But looking at SPY right now, again, you need to recover this ground and start getting back up above 712 if you want to keep going up. But if not, we're just going to keep chopping away down to these downside targets, preferably hitting the 9 EMA at 694, 695 before we start going back up. Looking at Amazon, we had some bullish news when it came to Amazon partnering with Anthropic yesterday after hours. It sent Amazon all the way up about 3-4% after hours yesterday. Then they were up about a good 1% today and started to drop right at open. You see how we opened up here and it just started falling out. But also this was a buy area because the high on November 3rd was 258.50. All right. And we kept trying to get through this level, was resistance, and then boom, false breakout, we come down, and then another false breakout. Two false breakouts. It does not seem bullish to me. I see it's coming down to my alert and filling this gap up at 240. We did touch 245 yesterday and then bounce back up. So the next stop could be 245. And if that doesn't hold, then we'll finally get the sell-off. So pay attention to that. Again, this is a strong resistance right here, 251. So this 250 area needs to stay solid. If not, then it's going to come down. This buy area right here was the ticket to run up beyond 258 to 260, and it did not happen. False breakouts are bearish. So let's see tomorrow if we can get another test. You start to break down from yesterday's low, then hey, gap fill right here before we can start going back up. And if you lose 240, shoot, pack it up. We're going to drop another 7 points. All right. Looking at Apple, Tim Cook has stepped down from the CEO, is going to take place and be official, and he will be replaced September 1st. Now, market bullies have been talking about how Apple has not have any innovation and does not change anything. Maybe that might change, and that might send Apple up. Usually when you lose a CEO, depending on how it goes, the stock goes up. Today, it went down, not only just because of news, but the technicals. You saw that on December 3rd to January 20th. We went from the high and low with our Fibonacci retracements, and our 78% retracement level right here has been a strong resistance at 278. And then so has our 66618 range. And look what happened the last time we broke down from the 66618 range. But we faced resistance right here, the 50% retracement level. Now we're holding the 50% retracement level as of today as support. We start to break down here, then we could change the sentiment of these EMAs. They can start sloping down, and we can just start breaking all the way down to the 250 range, touch the 200 EMA, and possibly back down to 240 and lower. So be on the lookout for the breakdown. But what I see happening is, and when in doubt, you got to zoom out. But I'm zooming in right now because I want to show you guys something. If you want to see what's going on, let's get this drawing tool real quick. My brush, left shoulder, head, possible inverted head and shoulders starting. All right, we have a possible inverted head and shoulders starting right here. If we can come all the way back down to the 257 area and then break out. All right, so a pullback can be healthy and set you up for something bigger. Minor pullback for major comebacks. So That's what you guys need to pay attention to, and it will be all fine. Under 250, I'm bearish on Apple. As of right now, just a slight pullback in my opinion to the 38% tracing level, and then possibly go back up. So we could hold here or hold here. This $6 range would be good puts, play level to level if you break down below here. But if not, you want to just sit on cash until we get to another buy area. That is smart too. We have to get through the 66618 range though before we start seeing real upside. All right. Tesla has earnings coming up tomorrow. It is getting spooky. We have a close under the 250 EMA. We were looking good. We were supposed to get out the 405 area. Strong resistance. You cannot get out of this area. You do not go to 422. Now, the 9 EMA is above the 21, except for the 200 is above the 50 EMA. That is not a good look. You could find support down here before earnings, and then after earnings, we just break all the way out. It could be something nasty. You could have a good sentiment off of earnings, or you could just keep selling off until Elon comes up with some good news, some good guidance, and all that. Right now, it is not safe to play Tesla unless, hey, you're going to dollar cost average in. I want to see the next move before we get some support, because we're sitting in no man's land right now. All right. So either we break down from these EMAs or we start to truck back up here. But again, I'm not touching calls until we go to 405, and then we run up to 422, or we get the puts until we get down to 357. It's just a lot going on. So I'm using my EMAs as support and resistance as of right now. And I see that we have a bearish sentiment so far. Under the 21 EMA, I definitely would pack it up. Remember, this is not financial advice. It's just for educational purposes only. I'm giving my opinions on the market and how RGO would trade. Reek is not out here trying to be anybody's financial advisor. Intel Corporation is running rampant. It has been going up. Trump administration has made about over 200% trading Intel, right, with their investment. Intel also has earnings coming up this week, which is on Thursday. What you need to see is, though, that this evening star doji right up here is signaling a bearish reversal. But before we get bearish, we need to break down from this candle. You have the candle before the reversal doji starts. You need to break down and have a 2 candle confirmation before it could happen. So I want to set my alerts here at 64. After 64, I'm going to set another alert right here at $62, $61.99. We break below here, then yes, we will come down to the 78% retracement level on my multi-year fibs, and then fill the gap to the downside. If these levels do hold, we could break back out on the daily. But remember, during earnings, even though you can have good earnings and good guidance, you can have an implied validity crush, an IV crush. So be careful when it comes to placing your trades before earnings. The safest thing to do is wait until after earnings and play the continuation, see the move, see the setup, because if not, you're going to get burned. All right. Looking at Palo Alto is sitting at the 400 EMA on the daily. Nice rejection, but we have a big body candle going into the resistance. Last time we had a lot of indecision and you sold off, and then we bounced back up. We're sitting at my 6.6 range on my multi-year fibs. Very bullish if we get above 178 to 180. You break out of here, and that's where my alert is set up. Then we're running off to the 78% retracement level. All right. If we do not get that, we start to break back down here. I can see it's coming back down to support and loading up at 145 before we start running back up. Okay. Back with SPY. If you want to make good money in the market, you need to know how to chart. You can't just look at news. You can't just go off what people are saying on social media, saying I bought this, or whatever. No shot to them, but you need your own type of trading strategy, or you need to know the fundamentals. What I like to do is I like to keep it very, very simple and very elementary for anybody that wants to learn how to trade, how to get in positions. And the first thing you want to learn how to do is set up your support and resistance. And if you're a day trader, one of my strategies I like to use is looking at the first 15-minute candle along with pre-market. So I go to the 15-minute chart, I zoom in, I get all my data ready, and then boom. What I'm going to do, I'm going to look from 4 a.m. all the way to 9:30, and I'm going to figure out my pre-market high, which was right here at 712. I find my pre-market low. Once I find my pre-market low at 709.50, I have 2 levels, and you can see resistance and support. And then you could also get your pre-market high. I mean, not your pre-market high, excuse me, your first 15-minute high and first 15-minute low. Now that you have these levels right here, right? You could say, okay, cool. We're very bullish if we get through the pre-market high. We're bearish if we break below the first 15-minute high if you broke out. We had the retest right here. We did nothing with it. We came back down and we broke down. Now we have the pre-market low. Again, another level to the downside because we were above that level. And then last line of defense, the last low we have here for the first 15 minutes was 708. Once you broke through there, flush city all the way down to your 200 EMA on your 15-minute chart. If you don't want to do this that way, you like using Fibonacci retracements, just find your current high and low of the day, take these out so they're not all messy, and then you get your Fibonacci retracements and you go from top to bottom. Find your current high and low within the first 15 minutes and using pre-market, and you can see that, whoa, 66618 range. I told you guys, highly psychological areas, 50%, 78%. We had a strong rejection right here at the 66618 range, fell down, then another rejection at the 50% retracement level of 710, then it was curtains. All right, that's how you play early in the market. You would do the same thing for the upside. Now, what gets a lot of people a lot of money too when they trade 0 DTEs is the last 30 minutes, the last hour of the market. You feel me? The last 30 minutes is really, really volatile. Everybody is taking all their profit, whether they have puts or calls. Theta is finally set in and is not really cooking you. So you could really get into a play. It's very, very volatile. So what comes easy isn't always worth it because you may be up 50% in 2 minutes and then in 30 seconds you're down 75%. All right. So you got to stick and move around these times. But people got in this trade at 3:30. Now what you want to do is go to your 5-minute chart when you're looking at the end of the day and see that, okay, these EMAs work as support resistance. We teeter-totter around here with some indecision candles on the 50 EMA. Then our EMA did it break out a little bit, but then it curved right back down, and it happened as soon as we rejected the 400 EMA right here. And what happened? We started breaking down. Once we broke down below here and the 9 started curving down this crazy and they gave a lot of momentum, boom, this big flush right here, 5 minutes at 340 paid you handsomely. All right, that is how a lot of people play it. Quick rundown of playing the first 15 minutes, setting up your market, getting your price targets, and then playing the last, roughly 30 minutes to an hour at the end of the day. And other ways to stay in your trades or to figure out how you're going to trade during the day, you want to look at the 4-hour chart and the 30 minutes. But we're going to get to that in the next video so you can see how things play out. Rather than that, I appreciate y'all stepping in here with me. And like I always say, whether the market's up or down, we see green. Peace.